Bitcoin was called a commodity, not a security. And everybody's like, oh no, that's great. We didn't want to be a security. Be careful what you ask for. I believe it was intentional to call it a commodity so that Leo Melamed and his buddies and the big dogs could use paper to manipulate the price. Look, I am worried, a little bit, and I talked with Tim a lot about this, that there is this kind of super cleansing that has to happen in these periods where you basically got to wipe out all of the leverage.
Back in February, Mark Yusko made a bold call that went against the sentiment of many skeptics. He said, contrary to popular belief, the 4-year Bitcoin cycle is not dead. And now, months later, his conviction remains the same. According to Yusko, Bitcoin's price action continues to follow a pattern anchored to the block cycle, not strictly to the calendar year. The real rhythm of Bitcoin isn't tied to time. It's tied to the number of blocks mined between halvings. That's why, he says, the market tends to peak 1 month earlier every cycle.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
In February, I said, look, contrary to popular belief, 4-year cycle's not dead, and we will enter fourth quarter and we will have a peak, a speculative blow-off peak, just like the last ones. And depending on how high we get above fair value, we'll have, that type of correction. I didn't think we'd get as high as 2x, right? We were 2x in 17, 2x in 21. I thought this time we'd hit 150, 170, which would have been, 50 to 70% above fair value. If fair value was ticking around 100. Long story short, I also, and I didn't get too specific on this, but I did change my view a couple weeks ago when I saw the tweet from the guy from 2 years ago who said October 6th was gonna be
like
the peak.
Reddit thing, yeah.
And there's a reason for that. It's not a 4-year cycle. It's a number of blocks cycle. And the number of blocks is 1 month less than 4 years. So December 18th, then November 21st, October 6th was the day.
You think the top is in? You think the top is in?
No, so I'm not saying it is, but what I'm saying is it's possible, right?
Sure.
The difference is, but Mark, things have changed. There's more institutional demand. Yes, there is. Mark, things have changed. The ETFs. Yep. But what hasn't changed is human nature to lever up. You said $1 million idea. Don't get liquidated. Right?
I know, it's crazy. Crazy. It might be $1 million idea just for one person. Maybe
and
$2 million idea.
But here, it's a crazy phenomenon. I shouldn't rat out my family member. I won't say which one, but I shouldn't rat him out.
Your brother-in-law.
But I've told the story before.
I know.
In the last cycle, he calls me and said, they stole my Bitcoin. I'm like, what are you talking about? He says, well, I was on Bitfinex. I'm like, stop. No one stole your Bitcoin. Now, some might argue that is their business model. Lure people in with the promise of riches, and then when they can't make the margin call, you confiscate their Bitcoin. So maybe you could call that theft. But the reality is you chose to lever up your Bitcoin 50 to 1. You don't lever an 80 vol asset 50 to 1 unless you plan on being less rich. If 126 was kind of all the juice we had in terms of the over leveraged, because there's less leverage in the system and so much spoofing going on. I mean, the amount of spoofing going on by JP Morgan, I shouldn't name names, but by the big dogs, right? That we can name names, but we know this is happening, right? They do it. See, commodities are an interesting thing. There's a reason, I believe, that Bitcoin was called a commodity, not a security. And everybody's like, oh no, that's great. We didn't want to be a security. Be careful what you ask for. I believe it was intentional to call it a commodity so that Leo Melamed and his buddies and the big dogs could use paper to manipulate the price. And so that little thing that everybody thinks was an afterthought, oh, they couldn't figure out what it was, so they just called it a commodity. No. It was intentional to make it a commodity because commodities can be controlled. And so, but my point is, if fair value is 91, and let's say it's somewhere between 91 and 100 because you don't have perfect accuracy, and we only got to 126, a 26% kind of premium to fair value doesn't need an 84% correction or a 75% correction.
That's right. So
it only
maybe we're
needs,
just becoming more boring.
Yeah. And so
maybe we just got to 99. Maybe that's just one of those close enough things.
Yeah. And I am worried, a little bit. And I talked with Tim a lot about this, that there is this kind of super cleansing that has to happen in these periods where you basically got to wipe out all of the leverage. The relatively small amount that can cause meaningful moves in price is still bugging me. And this is one of my personal pet peeves about market cap generally. Like you have all these, I'll call the altcoins, right, that claim to have these big market caps. Like you're taking the last 10 tokens traded at some price, multiplying that by billions of tokens and getting a market cap. If the person who formed that token were to sell one, not like 5 or 10, one, like if Elon sold one Dogecoin, what happens to the price of Dogecoin? It goes down a lot. But Bitcoin shouldn't, in my mind, be quite like that because yes, we do the same silly thing. We create the market cap by saying, oh, if Scott and Mark exchange a Bitcoin for $102,946, and there are, 18 million-ish Bitcoin, then the market cap is, 2.1 trillion. Okay, but we sold one Bitcoin. You can't price a whole market based on one transaction, but that's the way we do it in all assets.
Despite Bitcoin's long-term trajectory, Yusko cautions that the short term always includes what he calls a super cleansing. These are the sharp, violent pullbacks that flush out leveraged traders and reset the market for the next phase. Even a small amount of leverage can cause large price swings in such a volatile asset. Yusko recalls how in 2018, after Bitcoin held around $6,000 for months, the floor suddenly collapsed, dropping to $3,400 in just 36 hours. He warns that a similar wipeout moment is always possible, even today. However, this cycle's structure appears more mature, with less overall leverage and more long-term holders.
In February, I said that, look, the 4-year cycle's not dead. Humans are going to human, and we humans will push the price above fair value. I mean, Tim Peterson.
So we've talked about this a lot. Where do you see fair value now? Just as
fair value. I just talked to Tim. I talked to Tim for a long time on Friday. I had a long car ride and we just chatted. 91, 92K is fair value. And everybody say, you can't determine it. I'm like, he's been doing it for 8 years and it's pretty damn accurate. And the idea of Metcalfe's law applying to networks, and Bitcoin is clearly a network, and we can gather all of the inputs into that network and we can calculate a number. And if that number tends to correlate to the price over a long period of time, one might say that the model has some value. So, and what's crazy to me, you and I have been doing these kind of things for a long time. So back in 2017, the fair value was 10 and we hit 10 within 4 days of the model. The model said November 6th, it hit November 10th, and a month later we were 20. Well, if you're 2 times fair value, what is likely to happen? Now, interestingly, it happened precisely on the day, and you knew I would go down the sinister path here, but precisely December 18th, to the day that the CME released futures contracts.
Yep.
And that goes to about 6 months earlier when Leo Melamed, the chairman of the CME, said, look, we will tame Bitcoin. Like, that's a weird word. That's a confrontational word. So what does that mean? Well, that means that if I can, in the old days, if I wanted to sell you a Bitcoin, I actually had to have a Bitcoin. Just like if in the old days of oil, if I wanted to sell you a barrel of oil, I had to have ownership of said oil. But in the futures market, no. I can create something out of thin air in paper, and I can just execute a sale. So the price collapsed from 20 to 10 to 6. And this is the one thing I am nervous about, Scott. And I don't think it's going to happen, but I am nervous about it. If you remember November 6th, back in 2018, we were sitting at 6K. And everybody's like, okay, that's it. That's the bottom.
Man, that 6K floor.
And holy crap. I mean, it was
half gone in 12 hours.
I mean, it might have been 24 hours. It might have been 36 hours. I don't exactly remember. But it was super fast. And we were at 3,400. And everybody's like, that can't happen. Well, it just did. And so then, okay, we start going back up. So then we get to the 21 cycle. And we get to, fair value had crept up to about 32, 33K. And we went all the way to 69. And again, to the day, November 21st or something like that, CME releases more futures, more weapons of mass destruction. And we top at 69 and go all the way down to 15. And now at 15, if fair value is 40, what happens? Investors start to accumulate. But then we go back. So now here we are. And what's interesting is every halving, we add a zero, meaning we 10x the market cap. And that's kind of the parabolic, Metcalfe's law kind of model is we went from 10 to 100, 100 to 1,000, 1,000 to 10,000, 10,000, this time 100,000, which means the next halving, we go to 1 million. Everybody's like, that can never happen. I'm like, no, it can. And it actually will.
Yeah.
But I don't know. It's not going to be a straight line. So
he also criticizes how market cap is calculated, both for Bitcoin and altcoins. He points out that market cap simply multiplies the last traded price by the total supply, even if that supply is largely illiquid. He jokes, if Elon sold just one Dogecoin, the price would collapse, but the market cap still pretends it's billions. For Yusko, this distortion highlights how fragile valuation optics can be and why investors should focus on network adoption and utility, not just price. Perhaps the most fascinating part of Yusko's framework is how he applies Metcalfe's law over time to forecast Bitcoin's exponential growth. Each halving, he says, adds a zero to the market cap, effectively a 10x every 4 years.